What is the minimum amount to invest in private equity? Most people think that private equity is only available to the ultra rich or billionaires, but that is not the case anymore. In this video, I'm gonna show you how to get started in investing in private equity, whether it's $1,000 or $100,000. This is what you need to get started. Can you even invest with $1,000 or $100,000 in private equity? I'll break down the different options to you at every level of investing and show you how you can get exclusive access to private equity deals that most people aren't aware of. If you've ever wanted to invest in private equity but never knew how much money it actually took to get in it, then stick around. I'll show you what's required to start investing in private equity today. By the end of this video, you'll know the minimum amount investment needed to get into private equity, what the different types of private equity funds are, and what your options are based on your budget. This is going to be everything you need to know to get started. Understanding minimum investment amounts in private equity. Private equity investments vary based on structure, fund type, and investor eligibility. The minimum amount of investment depends on the type of private equity investment you make. Crowdfunding platforms are going to be the entry level. This will be the least amount of capital you need to invest, and you can invest starting at $500 or more. Private real estate funds, like my own, Patriot Fund 5, start at a $50,000 minimum investment up to $1 million or more. Institutional private equity firms, these are the Blackstones and KKRs. These can be as low as $250,000, but typically it's $1 million or more in these larger institutional private equity investments. Private equity investment levels, what are your options? The investment level, $500 to $10,000. Investment type, crowdfunding platforms. Examples, Fundrise, Realty Mogul, CrowdStreet. $10,000 to $50,000. Private REITs or interval funds. These are Blackstone REITs or Starwood REITs. $50,000 to $250,000. These are private syndications and private real estate funds. Funds like Patriot Fund 5, private multifamily or storage deals. $250,000 plus, sometimes more than $1 million. These are institutional grade private equity funds. Examples are Blackstone, KKR, Carlyle Group. Investing in crowdfunding platforms, starting at $500 up to $10,000. These are great for entry-level investors who want to get exposure to commercial real estate deals or other private equity funds that buy businesses or alternative assets. The pros are you get to choose from many various assets and you can scan them online on these crowdfunding platforms, focusing on the investment assets that you like. If you like focusing on self-storage, there are funds that specifically focus on self-storage, or if you're looking for a firm that's going to acquire dental offices, you can find a firm on there as well that acquires operating businesses. There's no accreditation requirements on many of these crowdfunding platforms, which allows the average investor who doesn't have significant wealth to get exposure to private equity. Some of the downsides are higher fees. Obviously, there's no control, and sometimes there's lack of transparency or information available on these platforms. Also, access to the sponsor can be challenging, meaning getting a hold of the person responsible for the investment is not always available through these crowdfunding platforms. Also, returns may be lower than direct investment into private equity fund deals. Examples here are Fundrise, Realty Mogul, CrowdStreet. There's various ones online if you look on Google. Investing in private equity funds, starting at $50,000 minimum to $250,000 plus in that private equity fund. These are best for investors wanting higher returns, tax benefits, and access to exclusive deals. So an example of a real estate private equity fund is my Patriot Funds. We focus on buying alternative assets like self-storage, mobile home parks, and small bay warehouse. These are non-traditional real estate assets that offer the ability to raise returns or improve value. It's a fragmented industry where many mom and pops have owned these assets for 20 or 30 years, and they'd like to sell them, but they're not maximizing value. This is what private equity firms do. They can improve revenue and lower expenses, and then in turn generate more profit to the assets that flow through to the limited partners that benefit by investing in the fund. Some of the pros of directly investing in private equity are direct ownership access. So one, you can get a hold of the general partner or sponsor and ask questions and find out what the strategy is, and if there's any issues going on, you have a responsible party there, versus a REIT where it's a public company and there is no one directly that you can contact regarding your investment. As a private investor, you have direct ownership in the assets because as an investor of the fund, you own a piece of all the assets that are owned in the private equity fund. Also, alignment of interest. If you're working with a general partner or a sponsor in a private equity firm, A good sponsor will put up their own money alongside the investors, aligning the interest of the general partner and the limited partner. Myself at Patriot, I put in at least $1 million into each investment fund, so my investors know I'm aligned with their interests and my money is alongside theirs to be successful. Some of the cons of private equity funds are accreditation requirements. These investments aren't available to everyone. Another con is long-term holding periods. A lot of times these funds are holding assets for at least 5 years and not closing out the fund between 5 and 10 years of ownership. So if liquidity is an important aspect of your investment, private equity funds are probably not the investment for you. Large-scale private equity funds. This is at least $250,000 and many times more than $1 million of minimum investment. These are best for large investors wanting institutional grade deals in private businesses, real estate, or venture capital. Examples of these are Blackstone, KKR, Carlyle Group. These are the biggest institutions in the world that are private equity firms acquiring institutional grade assets. The pros, you're getting access to billion-dollar deals. They're buying infrastructure projects, large companies, small companies, and rolling these companies up into public companies. These deals will not be available to most investors. You'll need some type of relationship with an investment banker or wealth manager, and they take minimums of $1 million to $5 million to get into these billion-dollar deals. A downside of these types of deals is there's a lockout period of at least 7 to 10 years where you cannot get your investment back while you're making this type of investment. So how to start investing in private equity with your budget. So step 1 is decide how much you're willing to invest in private equity. Step 2, choose between crowdfunding, private equity funds, or institutional grade funds. Step 3, research the industry and the sponsor that is driving or managing the private equity investment. Look at track record, look at the timing of the investment, and look at the alignment of interest with the fees and the investment that the sponsor will be making alongside the investors. Step 4, start small. Diversify, try a few different funds and a few different investments and see how you like working with these different private equity sponsors or different industries that you're investing in. Now that you know the minimum to invest in a private equity deal, let's dive into how to analyze deals that are going into private equity funds. Click my next video and we're gonna dive into how to analyze private business deals and real estate deals so you know how to invest like a private equity pro.